If you learn never to work for money, you'll be a rich man.
Hello, everyone, and welcome back. Today, we're diving deep into the essentials of passive income, a vital component in achieving economic freedom. Passive income, in its simplest form, means money you earn with minimal to no effort. It is your key to financial stability and independence. This is Financial Intellect, where we promote that to be finance savvy, we are your buddy. Let's explore some of the most effective strategies to achieve this. The power of S&P 500 index funds. If you're looking for a wise, long-term investment, S&P 500 index funds might be your best friend. Why? Well, they track the S&P 500, which represents a significant chunk, around 80%, of the entire U.S. stock market's value, encompassing 500 of the most stable and influential companies in America. These funds are strategically designed to expose you to a diversified array of top U.S. companies, from tech titans like Apple and Amazon to renowned consumer brands like Coca-Cola and Johnson & Johnson. Here, diversification is the secret sauce. Instead of risking your money on the volatile fate of a single company, you're intelligently spreading it out across various sectors and industries, thereby significantly reducing your risk. Historically, these funds have shown impressive and consistent growth, weathering market fluctuations and still providing returns that often outshine those of individual stocks. They have an enduring track record that is hard to rival. Plus, the simplicity and transparency of these funds make them a favorite among both novice and experienced investors alike. And let's not forget their lower fees, a distinct and significant advantage over actively managed funds. With S&P 500 index funds, you're generally looking at an expense ratio of under 0.1%, which means more of your money stays invested and compounds over time, helping your savings grow at a faster and more efficient rate. It's a blend of stability, growth potential, and cost-effectiveness that makes S&P 500 index funds a standout choice for investors aiming for long-term financial security and prosperity. Unlocking the potential of royalty income. How about earning money every time someone uses your intellectual property? Sounds fascinating, right? That's what royalty income is all about. Whether you've written a book, produced a song, developed software, or created a patented invention, royalties can be your ticket to a recurring, stable income. What stands out about royalty income is its scalability. If your intellectual property, or IP, becomes popular, perhaps your book becomes a bestseller, or your song tops the charts, your royalties can skyrocket, transforming a single creation into a consistent and significant revenue stream. Moreover, this source of income is wonderfully passive. Once your IP is established, you essentially earn money while you sleep, affording you the luxury of time to focus on other creative projects, travel, family, or simply enjoy life more fully. Plus, royalty income is generally contractually bound, ensuring you are paid a predetermined amount or percentage for an agreed duration, thereby providing a layer of security and predictability in your financial landscape. This is income that doesn't require a 9-to-5 commitment. It's the financial reward for your creativity and innovation, enabling you to capitalize on your unique talents and insights in a way that can sustain you for years or even decades to come. The golden charm: investing in gold. Investing in gold is as timeless as it gets, consistently enduring as a symbol of wealth and security throughout history. In turbulent times, gold has been a refuge for investors, offering a safe harbor when stock markets are shaky and currencies are weak. It acts as a hedge against inflation and economic uncertainties, making it a staple for a well-rounded investment portfolio, especially in an era where financial markets can be significantly volatile. There are multiple ways to invest in gold. each tailored to different risk tolerances and investment goals. Besides physical gold, bars, coins, and bullion, you can consider gold exchange-traded funds or ETFs, which offer the benefits of gold investing without the need for physical storage. For those looking for potentially higher returns and willing to accept additional risks, gold mining stocks or mutual funds that invest in the mining industry are viable options. Each of these investment avenues comes with its own set of pros and cons, ranging from the purity and tangibility of physical gold to the liquidity and convenience of ETFs. It's also important to recognize that the value of gold is influenced by various factors, including geopolitical tensions, central bank policies, and currency strength, so it is essential to stay updated on market trends and global economic conditions. Conducting thorough research and possibly consulting with a financial advisor can help you craft a gold investment strategy that aligns with your financial objectives and risk tolerance, making your investment in this precious metal not just a defensive play, but a proactive and informed move in your wealth-building journey. The concrete bet: real estate and REITs. For years, real estate has stood out as a top-tier investment option, providing both tangible value and a proven track record of stable growth. Be it rental properties, commercial spaces, or undeveloped land, this avenue has consistently proven to be a strong performer, often offering a lucrative combination of rental income and appreciating asset values. However, for those who want to be part of the vibrant real estate market without the significant capital outlay or the commitment of actually buying and managing property, REITs, or real estate investment trusts, are a fantastic alternative. Acting like mutual funds for real estate, REITs pool money from several investors to buy, manage, and oftentimes renovate properties, giving investors a chance to earn substantial dividend payments, akin to rental income, and benefit from property appreciation. They're also highly liquid compared to actual real estate, trading on major exchanges just like stocks. This means you can buy and sell REITs easily without the need for lengthy and complex property transactions. Moreover, REITs are known for their tax advantages as they are required by law to distribute at least 90% of their taxable income back to shareholders as dividends. This can lead to higher yield returns relative to other investments. But it's not all smooth sailing. Just like any investment, REITs come with their own set of risks, including market volatility and interest rate sensitivity. Additionally, the management fees associated with REITs can eat into profits. As such, it is imperative to be comfortable with these risks and to conduct comprehensive research or consult with a financial advisor before diving into this enticing yet intricate segment of the investment world. Extra tips for maximizing your passive income. To close, let's go over some unconventional tips that can supercharge your investment strategy. For S&P 500 index funds, consider a dollar cost averaging approach, which involves consistently investing a fixed amount of money at regular intervals, regardless of market conditions. This strategy mitigates the impact of volatility and reduces the risk of making a poorly timed lump sum investment. For your royalties, explore partnerships with well-established companies or collaborators to expand the reach of your intellectual property, thereby increasing your potential revenue streams. Consider licensing deals or collaborative projects that can introduce your work to new audiences and markets. For gold investments, consider digital gold platforms which allow you to own and trade gold without the need to physically store it. These platforms offer more flexibility, lower transaction costs, and the ability to buy or sell gold 24/7. And for real estate, explore niche investment opportunities such as co-living spaces, tiny home communities, or properties in emerging markets that may yield higher rental incomes or appreciation potential. Additionally, consider tax advantages associated with real estate, such as 1031 exchanges, which allow you to defer capital gains tax when selling a property and reinvesting the proceeds in a like-kind property, thereby preserving more of your wealth for further investments. In all cases, it's paramount to stay educated and continuously update your strategy in response to changing market conditions, trends, and personal financial goals. As we approach the end of 2023, taking decisive action on your investments is more critical than ever. Making informed, well-considered decisions now can pave the way toward greater financial security and freedom. So, if you found this video valuable, please give it a thumbs up, share it with your friends, and don't forget to subscribe to Financial Intellect for more content just like this. Leave a comment down below with your thoughts or questions, and I'll be sure to get back to you. Thank you for joining me on this enlightening journey to financial empowerment.